You've probably heard it before, at the dinner table, in a late-night group chat, or shouted by someone on TV with too much confidence. Bitcoin? Total scam. Then 5 minutes later, Bitcoin? Greatest invention since fire. So, what gives? Why does Bitcoin have this split personality? Half digital messiah, half pyramid scheme? And more importantly, who's right? Well, here's the twist. The answer has changed, not because the internet got smarter, spoiler, it didn't, but because something massive happened while we were all busy arguing on Reddit. Institutions walked in, and they brought billions. They weren't swayed by hype, memes, or FOMO. They were moved by math, macroeconomics, and a little bit of fear. What's wild is, even as the headlines shout bubble or revolution, Bitcoin just keeps moving, block by block, building its own story. So what's really going on underneath all the noise? And why are smart people suddenly taking this so seriously?
First, what the heck is Bitcoin? If you're new here or just nodding along in Zoom calls pretending you understand crypto, don't worry. Let's rewind. Bitcoin is a decentralized digital currency. That means no banks, no governments, no single boss running the show. Instead, every transaction is logged on a public spreadsheet called the blockchain. It's secure, transparent, and nobody can fudge the numbers. You can think of it like gold, except digital, portable, and you don't need a vault. It's scarce. Only 21 million will ever exist, and it's mined using powerful computers solving complex puzzles. So yeah, it's like digital gold with Wi-Fi. Ethereum? We'll get to that, but hang tight. Bitcoin is a response to the flaws of the traditional system. Slow wires, high fees, inflation. It's money that works the way the internet does. The magic isn't just the tech, it's the idea that money could finally belong to people, not just banks. And the best part, you don't have to trust anyone, only the math. Why people used to think it was a scam. Remember 2010, back when Bitcoin was worth less than a slice of pizza? Back then, it was the Wild West. Hackers, drug markets, buy now or be poor, Twitter bras, and a price chart that looked like a heart monitor. People saw scams because, to be fair, there were scams, and a lot of them. And today, they're still out there. In 2023 alone, Americans lost $5.6 billion to crypto scams. Ouch! But here's the thing, those scams aren't Bitcoin itself. They're bad actors using the hype to fleece people who don't understand the tech. It's like blaming the internet because someone sent you a fake Nigerian prince email. The scam isn't the tool, it's how people misuse it. If anything, the real red flag is how little some people know about what they're buying, and how quickly bad actors rush in when there's money to be made. But if scams are your only filter, you'll miss the real innovation staring you in the face. Blaming Bitcoin for scams is like blaming email for spam. It misunderstands the problem. When the billionaires show up, here's where things get interesting. We're no longer in the era of basement coders and meme traders. Bitcoin is now, well, institutional. Let's start with one name, Michael Saylor. This guy bet his entire company, MicroStrategy, now rebranded as Strategy, on Bitcoin. He didn't just buy a few coins, he bought over 597,000 BTC. That's worth over $71 billion. In one of his keynotes, Saylor said Bitcoin is perfected capital, incorruptible capital. His company, it's turned its balance sheet into a vault. Call it risky, call it visionary, but you can't call it a scam if the CEO of a public company is literally putting his treasury in it. And he's not alone. Tesla, Riot Platforms, MARA Holdings, even Metaplanet, public companies are piling in. Over 125 of them now hold Bitcoin on their books. And that number, it's growing. You don't bet your corporate war chest on a meme, not unless you believe in it long term. These are companies accountable to shareholders, boards, and regulators. This isn't a YOLO, it's a calculated move. You can laugh at early adopters, but it's hard to laugh when Fortune 500 firms start stacking Satoshis. At this point, it's less about rebellion and more about smart treasury management in a changing world. The ETF earthquake, still not convinced? Then let's talk about the moment everything changed. January 2024, the US approved spot Bitcoin ETFs. That's right, Big Boy Finance finally said, fine, we'll allow it. Suddenly, anyone with a brokerage account could invest in Bitcoin without touching a crypto wallet. And institutions, they rushed in. BlackRock's iShares Bitcoin Trust hit $50 billion faster than any ETF in history. In total, Bitcoin ETFs now manage over $108 billion in assets. That's not some weird internet cult. That's Wall Street. Even Susquehanna, one of the biggest hedge funds on the planet, dropped $1.3 billion into Bitcoin ETFs. You don't need to love Bitcoin to respect that move. You just need to understand money. And money? It's speaking loudly. ETFs made crypto boring in the best way possible. And boring is exactly what Wall Street likes. For every doubter, there's a pension fund quietly adding Bitcoin exposure for future retirees. In other words, mainstream is no longer a dream, it's the new reality. Ethereum, the other crypto you should probably know about. Okay, quick detour. Let's talk about Ethereum. If Bitcoin is digital gold, Ethereum is a programmable economy. It's not just currency, it's a computer, a global, decentralized platform that runs smart contracts. A smart contract is like a vending machine. You put in money, it checks your input, then bam, you get what was promised. No human needed. Ethereum powers all kinds of apps, banking, gaming, NFTs, DAOs, and decentralized finance. It's like building a new internet from scratch. Its co-founder, Vitalik Buterin, once said, Ethereum can be used to codify, decentralize, secure, and trade just about anything. And he's not exaggerating. Today, Ether, ETH, isn't just a coin, it's the fuel that powers Web3. So is Ethereum a scam? If so, someone forgot to tell the developers building the next wave of apps on it. It's where builders are going, not because it's trendy, but because it works. That's the difference. Want to see where tech is headed? Follow where developers spend their weekends. And right now, it's Ethereum hackathons, not corporate cubicles. The retail tsunami. Institutions aren't the only ones showing up. You showed up. Retail adoption has exploded. In 2023, 420 million people globally owned crypto. In the US alone, 28% of adults hold it in 2025. That's over 65 million people. And it's not just investing. Businesses are getting on board too. Over 40% of small to mid-sized companies now accept crypto payments. Microsoft, Tesla, Starbucks, Gucci, PayPal, they're all in. You can buy lattes, luxury, or Lambos with crypto. Crypto isn't just sitting in wallets anymore. It's being used. That kind of real-world traction, not something you see with scams. When something becomes invisible, just another payment option, that's real adoption, and it's already happening. Next time you tap your phone at checkout, ask yourself, is this the future or is it already the present? The line is getting blurrier every month. Why institutional adoption changes the whole game. So let's connect the dots. When hedge funds start allocating capital to Bitcoin, when public companies restructure their entire treasury strategies around it, when regulators start approving ETFs, when retailers start accepting ETH and BTC like it's dollars and cents, that's not a red flag. That's a green light. Institutional adoption doesn't just legitimize Bitcoin and Ethereum, it scales them. It creates price floors because companies aren't selling every dip. Stability because ETFs and funds don't panic. Security because big players help keep the network strong. Innovation because funding now exists for real infrastructure. In other words, crypto isn't in the basement anymore. It's in the boardroom. And once something's in the boardroom, it's here to stay. Not trendy, not flashy, just inevitable. A network's value is in its users, and right now, those users include everyone from college kids to corporate giants. If the rules have changed, isn't it time our thinking caught up? What the experts are actually saying. Let's plug in a few real voices. Here's Michael Saylor speaking at Bitcoin 2025. Bitcoin isn't just money, it's economic energy. You store your work in it, your life force. It's the most efficient container we've ever invented. Here's Vitalik Buterin at ETHCC. It's not just about decentralization anymore. It's about creating concrete guarantees, privacy, control, portability for real people. And finally, the US SEC upon approving ETFs. Bitcoin markets have matured to the point where they warrant inclusion in regulated investment products. Those aren't hype tweets. That's serious language. People at the top are no longer asking if Bitcoin is real. They're asking how much exposure is smart. This is the part where the adults in the room aren't just joining, they're taking the stage. When the language turns formal, you know things just got real. What about the scams though? Fair question. Crypto scams are real. Rug pulls, pig butchering, Ponzi coins with cartoon mascots. But here's the deal. Those scams exist because crypto is valuable. No one tries to scam you with worthless stuff. Scams chase hype, and hype chases value. Think about the early days of the internet. It was full of garbage sites, fake news, and viruses. Yet we didn't call the internet a scam. We just learned to navigate it better. Crypto's growing up, but like anything valuable, it'll always have parasites. It's not about banning the tools, it's about educating the users. Knowledge is armor, and right now the best defense is clarity, not fear. Financial literacy isn't optional anymore. It's as important as locking your doors at night. If you want to play in the new digital sandbox, a little caution goes a long way. Where this all goes, let's zoom out. Right now, only 125 of 50,000 plus public companies hold Bitcoin. Blockware predicts that number will triple in 2 years. That's just the start. As regulatory clarity improves and on-ramps like ETFs get smoother, more institutions will follow. Ethereum is evolving too, moving toward greater scalability and real-world integration. Vitalik says the focus now is user guarantees, not just cool tech. This is what growth looks like. It's messy, it's fast, it's unstoppable. Bitcoin and Ethereum aren't vaporware. They're becoming infrastructure. And whether you love them, hate them, or still don't fully get them, here's the reality. They're not going away. Every year, fewer people laugh and more people build. If you're still asking, when will it matter? The answer might be, it already does, and you just haven't noticed yet. Ignore the revolution long enough, and one day you'll wake up surrounded by it. So, is it a scam? If you've made it this far, you already know the answer. Bitcoin's not a scam. Ethereum's not a scam. They're just tools. Radical, disruptive, powerful tools. And the people using them, some are bad, most aren't. But the tools themselves, those are legit. Institutions know it. Developers know it. Millions of everyday users know it. So maybe it's time to update the question. Not, is Bitcoin a scam? But, am I ready for a world where Bitcoin isn't going anywhere? Because whether we're ready or not, that world is already here. And it's just getting started. The train has left the station, but the best thing about this new world, it doesn't matter when you show up, as long as you're willing to learn. And honestly, isn't that what every revolution really needs? One more curious person asking, what if?